quick study. It's irrational for someone who's listening at the environment, but then just consider this, ne? I don't know, I found this playing already, so I'm just gonna continue playing it. Alright? Disregard the environments. It's wild. I just wanna get you zoned in. Let's say you're at the mall right now and there's shop music playing, there's someone speaking, there's some, it's like a really rough environment. I want you to look at one candle, that candle right there, and how that low was achieved. Look at how that candle achieves that low. It trades beneath that swing low. Buddy, this gap in here is an imbalance. This entire thing, the algorithm treats as a gap. Alright, so my anticipation is this liquidity void, this candle, this one big candle, price will retrace back into it. And looking at yesterday's close and open or high and low of the day, I can absolutely consider that price will go back into that candle before dropping. So what I'm looking for is without wasting any time, probably, or just halfway into the candle. Doesn't need to be that deep, right? And it doesn't need to go all the way down today. It can just go down to here, move back into a consolidation to begin tomorrow, and then when tomorrow begins, you get the breakout traders bracketing the stuff in here and looking for down moves. Essentially, what I'm looking for here is for price to move out of the smaller consolidations, right? These smaller consolidations and into the bigger range, which is the range I have annotated using these horizontal levels on the R1 chart. Okay, whoever taught me horizontal levels did me some justice. Big ups to that person. Alright, a friend of mine from around actually did that for me. Got a triple low here, or just 3 touches to the low in a consolidation period. If you were to look on a smaller time frame, of which is what I'm going to do right now, chart shift, okay, let's just zoom in first and then chart shift. Okay, there it is. I want you to look at that, buddy. In there, a consolidation, and look at how that price point was achieved. It was achieved as the first move out of the consolidation. That's why we have been warranted with this buy move. Alright? The analogy with this is that since price is trading above that recent short-term high, we can see price drop back into the low. This is basically just a swing high to clear the buy stop sitting above the initial high of the day. What am I speaking about? I'm speaking about this price point in here. But what I have annotated on the mini 5 day is this price point. So we're trading above the open. So what we can see is a move to the low to take out this liquidity. We can see a probable draw into the sell side liquidity. It's beneath these relative equal lows, and also it's beneath that weekly low. I think this is the low of the week from last week. Let me check that out. Yes, it's the low of the week from last week. So we can see price trade beneath that first initially before it retraces back into this candle. Alright, and then moves back into consolidation. Basically, this is the consolidation to end the day and shift price downwards away from that high. That's my current theory. Alright, so I'm going to use the building blocks over time. So just see what's happening as I have done here by going down onto the minute 5 time frame and realizing that price is trading above a short-term high. Let me zoom out. Actually, yeah, shifted too much. Okay, there. Right? So I need for price to get out of this consolidation range and stop hand low. After all, since price is trading above this high here, everyone, and I mean everyone, myself included, we all think know why it's going to close the gap from the open. All right. So with this mentality in play, we can all fall victim to buying here, which is wrong. You don't buy the high of the range, even if you think it's a breakout trade. You enter on the relative equal lows rather than purchasing at a premium. This is the premium of this consolidation range. As a matter of fact, this is the buy side liquidity of this consolidation range. This is where buy stops are resting. All right. If you want to argue, yes, you can take the opening price in here. Look at that. We traded above the opening price. All right. So we are trading above relative equal highs or old relative equal highs, according to the study of ICT. So I'm just going to use that to study this consolidation, this current price, whatever is happening in this current price. So for you as a beginner, I'd like for you to use these annotations. So I'm reading price all the way from the open, coming into the end of the London session. Look at what time it is. All right. So what am I looking for? I'm looking for footprints, signals. Here is a footprint, that evening star formation on the minute 5 time frame is in fact a good signal. All right. If you want to purchase the Nasdaq, it's already in the discounts according to the daily range. Right? That's premium. This is discounts. So from that swing high to this swing low, market maker fair valuation is around in here. That's a reason for us to consider purchasing price. Okay, let me check that out. Don't take my word for it. Okay, there's market maker fair valuation in there. Probably above those relative equal highs. Right? Since we're considering purchasing price back to fair valuation, one piece of study that we can all deem sensible is to wait for price to push downwards. Let me use that time frame with all those levels. You can consider that price can push downwards into that sell side. Let me zoom in once. Double tap. Yeah, this should be enough. And then shift it downwards. I mean, think about it. Look at it this way. Just look at it this way. All right? What do I want you to look at? All right, the trend was long on the daily. All right? It's been long. It's an uptrend. Okay, now let me do this. Simplify my life. I don't know. Is it asking me if I'm still listening? Yes, I am. Or is it the network? Probably. Okay. Sell-side liquidity is currently residing beneath the initial low of the day. I'm going to take the bodies of the candles. Buy-side liquidity is currently residing above the initial high of the day. And the underlying premise from the previous day was downtrend. So, with what is happening, people are selling the rises in a downtrend, selling the rises in a downtrend, selling the rises in a downtrend. Oh my God, I missed it. It's going big. It's selling big. That's the mentality. Oh my God, that's another rise. I should probably sell that. Bang, I'm sorry about your luck. Okay, we're at the bottom, at that horizontal level that we have annotated on the hour 1 time frame. So this is simply just a consolidation. Primarily, the first move out of this consolidation is the false move. So to give you some more equipment from your armamentarium, and to also aid you such that you have a repertoire, I am just simply going to end here. Whatever you think will happen should fall within the parameters of understanding that the primary underlying premise in the marketplace is a downtrend. So at the end of the day, anyway, we are going to have to call this entire thing a consolidation. From where? From that initial high to that initial low, and then from that initial high to the low of the day. Let me just put that on the charts so it makes more sense. So this entire thing in here will be just a consolidation. Moreover, we can just be offered with a consolidation range down here at the low before price goes up into market maker's fair valuation and then probably drop. They might even go above market maker's fair valuation, go into a consolidation around fair valuation. However, in this variation, they go into the premium and then discounts price to end the day or to begin the new day. From me to you, this is a whole lot of lipstick that you don't need. So what I'm looking for is 3 pulses to the low, 1, 2, 3, W formation or V bottom. Let it rip potato chip, right? Move back into consolidation to stay away from the high number and then drop. That's what I'm looking for without any lipstick, right? And here I'm going to see 3 pushes. So this move might be 6 to 8 hours, might be quick, 2 to 4 hours, right? I'm just considering it as a beginning of London analysis. Thank you.